Okay, morning everyone. Welcome back to Monica by Aiman here. So looking at the S&P 500, right, I think the market is absorbing the major central bank move and highly significant corporate earnings, right? So uh, as you guys know, the Fed delivered the cut by signal caution, where the rate now stands at 3.75 to 4%. I mean, lowest since 2022. Also, shifting the market's focus entirely back to the corporate earnings. Okay. I think given the performance of the tech earnings after the close, I think the underlying risk appetite remains strong. So we should watch for the outcome for the two presidents, Trump and Xi Jinping meeting today, as trade clarity is now the next major factor for the that could drive the market, right? So looking at the chart, well, it underwent a consolidation at close on Wednesday's session. Right. So looking at our US trading stocks, we have published yesterday. So we published Broadcom, AVGO. So the stock is on its breakout formation, breaching above the $360 level. So we can expect the stock to travel towards the $385 level on a strong momentum, followed by the next resistance at $420 level. Now, if the counter reverse, do a chop for the $340 level for the immediate support, as it could indicate an initial trend reversal, right? Also, we got here Shopify. So look at the charts here. The counter is on its high market structure after rebounding higher above this $170 level, and eyeing for the immediate resistance at $185 level. So if the stock climb up higher, we could see that it might travel towards this second resistance at 200 US dollar level. Now, if the index slides below the 155 level, this might signal a shift in a bearish structure. Right. So for the A50, right? So the sideways movement in this A50 yesterday was due to a temporary pause in a decision making as traders awaited clarity for the US monetary policy and trade regulation yesterday. So we are now waiting for the two presidents meeting outcome for the next decisive directional catalyst for these Chinese equities, right? However, for now, we see that the uptrend for A50 futures remains intact, right? So, looking at our WTI crude oil futures, well, it traded almost sideways yesterday, driven by a sharp conflict. Well, I think a major bullish signal from the EIA showing that unexpected barrel drawdown in the US inventories, right? So the strong demand queue was immediately offset by supply concern over the I would say likelihood of OPEC Plus announcing a larger output increase this weekend to compensate for the recent, if you notice, Russian sanctions, right? So hence, we still keep, however, we still keep our bearish view for this WTI futures for now, right? So coming back to our local market, right? So the FKLI dipped slightly on Wednesday. I think a move attributed to cautious profit taking in heavyweight like those telcos, plantation stocks, right? Circumdigi, ahead of two major global risk event yesterday. So I think the investors caution ahead of the US Fed rate decision yesterday, which the Fed really cut rate to 3.75 to 4% range, right? And the highly anticipated two presidents meeting today. So selling pressure was concentrated in the communication, I think telco, financial, and also plantation, while the local insti support has kept the index, right? So we still keep our bullish trading bias unchanged for this FLI, anticipating for the index futures to hover at the 1635 points, while the support remains at 1570 points. So judging by the uptrend line here, the bulls still have the technical advantage, right? So okay, so maybe some of you are still new here, right? And this is our watch list that worth looking at. And if you are confused, right? So to me, okay, right. So if you were to ask, so out of this list, which are the best, right? So to me, my picks of the week are still TMK, MPI, and also OCK, right? Okay, so if you look at the TMI charts right here, working on the trend of I think China plus one, I think TMK could benefit from here as manufacturing company diversify, right? So looking at the charts right here, the stock form a strong base at 1 ringgit and 35 cent, and we notice that the price has been compressing lower towards this golden ratio of Fibonacci. So if the bulls to strengthen, we expect the price to breach above 1 ringgit and 40 cent and potentially climb towards the 1 ringgit and 50 cent, also 1 ringgit and 60 cent level. Right, so looking at the MPI here, I've been sharing this in Monica Pa recently, and I think the price move as what we expected. Now that the price has breached above this 31 ringgit level, together with a higher structure, we now can expect the price to continue the journey towards this 32 ringgit, 32 33 range level. Okay. So for OCK, I've been sharing about the view for telcos recently in my presentation. So the idea is that we are waiting for the telco to move after financial sector move, right? So now that I have gradually, I mean this stock been the counter been gradually rebounding from our zone, we now can expect the price to climb towards the 48 cent, also 51 cent level, right? All right. So based on the heat map right here, while I think the overall index movement is mixed, with the losers and the gainers, right? We are seeing a compelling strength in the key sectors like tech, consumer focus, consumer related stocks, indicating a fundamental growth in targeted areas of selected sectors, right? Also, do note that we have in-house overweight for consumer sectors as well. So moving on to our Malaysia trading stock. So we have Malaysian Cement, M Cement today. So the stock is in its breakout formation after breaking above the 6 ringgit and 65 cents. So with that, we expect that the momentum to remain bullish and the stock able to climb further towards 6 ringgit and 95 cents, followed by 7 ringgit and 25 cents. So if the stock clear below 6 ringgit and 35 cents support, this could signal a deeper pullback, right? So next we have iSense Group. So the stock is the stock is also experiencing a breakout formation as well. So if the breakout sustains above this 41 cent level, we're expecting that it could reach the 45 cent level, followed by 50 cent level in the coming sessions ahead. So do watch out for the 37 cent support for any attempt of reversal. So moving on to the FCPO, well, it tumbled on Wednesday's session, extended its losses to I think 12-week low, as the market continued to be pressured by the bearish fundamentals, right? Also some of the seasonal factors. right? So I think the decline was driven by weakness in competing the edible oil and also a stronger ringgit and also lower demand prospect for the approaching winter month. So after our support been breached yesterday, I revised the support lower to 4150 and also 4050 level, right? All right, so just a quick one. I noticed Joseph been talking about my stop loss yesterday's, right? So tips for you guys is that make sure to find a support. To find a significant level where supply and demand, like right here, is stable, right? So yeah, I think that's all from me for today. I'll stop here and pass the floor to Adam for his initiation report. Thanks everyone and happy trading.
All right. Good morning, everyone. Let me just share my screen first. So today we have a initiation on IntaBina. Okay, we have an initiation on IntaBina. So we are initiating coverage on IntaBina with the buy and an SOP derived TP of 81 cents. Hang on, let me see. Yeah. So basically, IntaBina is is a contractor which focuses on mainly high-rise projects, which contributed about 82% to revenue, versus low-rise projects, which contributed about 9% in FY24. And other business segments include the property development arm and also a small business in relation to the supply and installation of lifts, but that only contributes about 0.9% to revenue. So back to the construction segment of IntaBina, they have a relatively strong business, clientele, which with long relationships. So you can see here, they have a solid relationship with the key developers in Klang Valley and even some of them in Johor, like Sunrise and EcoWorld. And so far for this year, they have secured 865 million ringgit worth of new jobs versus our new job win target of 1.1 billion ringgit. So in terms of the tender book, they have about 4.5 billion worth of tender book as of end of September. And if we were to assume a 25% win rate, that would be around 1.1 billion. Hence, we also assume a 1.1 billion new job win target for FY26, followed by a 1 billion job win target in FY27. And one major thing to note that is that its key clients like Gamuda Land and EcoWorld and even Sangari Property has seen commendable property sales trend and also launch trends. And another thing to bear in mind that Johor is likely to be another growth area, given that previously that IntaBina has secured uh, roughly more than 200 million worth of jobs in Johor, and currently out of that 4.5 billion tender book, about 9% is coming from the state of Johor. Aside from that, as for the property development arm, which they just ventured into in October 2023, it makes up about 7% of FY24 revenue. But moving forward, given that the progress billings would continue for its existing jobs, which is semi residence, which has a 205 million ringgit GDV, we view that revenue contribution would increase to about 15 to 20% in the next 3 years, and not and for semi residents, its open market units has been fully taken up, and the next projects would include Seiring Setia, which will be launched by first quarter of next year. That has about 200 million worth of GDV, followed by another project in Bandar Grand Mary called Iran Restu, which has a GDV of about 300 million ringgit. So that will be targeted to be launched in first quarter of 2027. Like what I mentioned, they've got a lift business, but it only makes up about 1% of total revenue. So going back to the valuation, we evaluate using an SOP valuation. Um, we ascribe a target PE of 11.5 times for its construction arm, and we think that this is reasonable given that the target PE range that we ascribe to our small cap players is between 10 to 14 times. So 11.5 times is reasonable given that its market cap of about 200 million plus, and hence should be at a discount to the KL Core Index, which is trading at a PE of about 14 times mean PE. So in terms of its property arm, we ascribe a 50% discount to RNAV, which is in line with property developers which have a high exposure in the Klang Valley as opposed to having a high exposure in Johor. So in terms of our EIG score, we ascribe a 2% EIG premium given that it has been disclosing um, uh, emission uh, details since around 2022 or 2023 compared to other players or construction players which have a larger market cap but have yet to disclose their emission details. So all in we arrive at an 81 cents target price, which implies at 11 times FY26 PE, which is still at a discount to the KL Con Index, which is trading at a mean of 14 times. So that's about it, everyone. Thank you. I will pass on the floor to Siang.
Thanks, Adam. Let me continue with a quick results update on DXN Holdings. Um, Essentially, this is their first half FY26 results, and we consider the results as below expectation at only 40% of our forecast. This is mainly rising from the unfavorable forex trends as the currencies of its key overseas market depreciated against the strong ringgit. So post results, we cut our numbers by between 13 to 14% to account for a more conservative growth assumption, and our DCF derived target price is revised down to 70 cents, which implies 11 times PE. The group declared DPS of 0.88 cent in second quarter to bring first half payout to 1.7 cent, which is an unchanged amount from the payout last year, and this represents a payout ratio of 59%. So all in, we are maintaining our buy call on DXN. Our target price is now 70 cents. We like the stock for its attractive valuation, considering the effective business model to penetrate new markets and foster sustainable growth. We view the Brazil expansion as a medium-term growth driver, and we expect the healthy cash flow generation to continue facilitate a generous dividend payout. The yield at this point, according to our forecast, will be about 6%. That's it from us. Thank you so much for joining us this morning. Happy trading, and we'll see you again in the next morning kappa and 8. Thank you, everyone.